All right, so let's dive into Cisco's Q1 2025 earnings report.
Okay.
And as you probably know, Cisco's like a bellwether,
Right.
for the tech industry. So like their numbers kind of tell us
Yeah.
a lot about their overall health of tech and
It's like a sneak peek
yeah,
to
like
what's happening.
sneak peek exactly.
Yeah.
So we've got their press release, of course, and then we've got their SEC Form 8K filing, which is like what companies have to file with the SEC to
Right.
keep investors, informed.
Yeah.
And these can be pretty dense documents,
It can be, yeah.
but
But we're here to break it down.
yeah, we've pulled out the good stuff for you.
Highlights.
The highlights, yeah.
Yeah.
So big picture first. Revenue is down 6% year over year.
Okay.
Which, might sound a little alarming.
Yeah, but
Wall Street was actually expecting a bigger drop.
it's all about expectations.
Yeah.
Right.
Right.
If you set the bar low enough, you can always beat it. That's right. That's right.
But yeah, I mean it's not as bad as some people feared.
Yeah, so not a total disaster.
Yeah.
But here's something I thought was interesting. Product revenue
Yeah.
fell more than overall revenue.
Right. So that was down 9%.
9%. Okay.
Whereas services revenue actually grew.
Really?
Yeah, by 6%.
Wow. So that's a pretty big difference there.
Yeah. Yeah.
Why would services be up when products are down?
Well, this is really pointing to a bigger trend we're seeing in the tech industry, which is a shift towards recurring revenue.
Okay.
Think subscriptions,
Okay.
support contracts, things like that.
Like software as a service, that kind of thing?
Exactly. Yeah, software as a
Yeah.
service. Because that provides a steady flow of income as opposed to like those one-time product sales.
Right. Like if you sell a router,
Yeah.
it's a one-time sale.
Right, exactly. You sell it once and that's it.
Yeah.
But if you have a subscription, they keep paying you every month or every year. Right. I mean, that's like the whole subscription model.
Exactly. Yeah, it's everywhere these days.
Yeah, Netflix, Spotify.
All of them.
All of them, right. Okay, but wait, there's another little wrinkle in this revenue story.
Oh, yeah, you're right.
About Cisco buying another company?
Yeah, remember Splunk?
Oh, right, Splunk, yeah.
They acquired them recently, and if you take Splunk's numbers
Okay.
out of the equation, then Cisco's revenue decline actually looks a lot worse.
Oh, really?
Yeah, more like 14%.
So it's like acquisitions can really kind of...
They can skew the numbers.
Yeah, skew the numbers, make it look
Right.
better than it really is.
Exactly. It's important to look beyond the headlines.
Beyond the headlines. Okay. So let's drill down a little bit deeper now
Okay.
into specific product lines.
Sounds good.
And it seems like, Cisco's making some pretty strategic moves here.
Yeah, absolutely.
Uh-huh.
I mean, one standout performer is security revenue.
Okay.
Up 100%.
100%.
100%.
Wow, that's huge.
Yeah, that's massive growth.
Okay.
And a lot of that is driven by the Splunk acquisition.
Okay, that makes sense.
Yeah. But also observability is doing really well too. Up 36%.
And observability, is that like a...
It's basically monitoring and analyzing how systems are performing.
Got it. And those are both like really hot areas in tech right now, right?
Oh, absolutely.
Yeah.
I mean, everybody's talking about cybersecurity these days.
Right.
And as companies are collecting more and more data, they need better tools to understand it.
That makes sense. Okay. So Cisco's kind of riding that wave.
They're capitalizing on it.
Yeah, but on the flip side, their traditional networking business, which, has always been...
Right, their bread and butter?
Yeah, their bread and butter.
Took a hit, down 23%?
23%.
Yeah.
Ouch. And collaboration tools like video conferencing also dipped a bit?
Yeah, not as much though.
Okay.
Only 3%.
Okay, so what's that telling us? Are businesses just like cutting back on,
Well, it could,
traditional IT infrastructure?
yeah. It could be a sign that, with all the economic uncertainty,
Right.
companies are being more cautious
Yeah.
about their spending.
Makes sense. I mean, it's like, if you're worried about the economy,
Right.
you're not going to go out and buy a bunch of new servers.
Exactly. You're going to focus on what's absolutely necessary.
The essentials, right. Okay. But let's talk about profitability for a second.
Okay.
Even though, revenue dipped in some areas, Cisco still managed to keep those
They did.
profit margins, pretty healthy.
Yeah. Both their GAAP and non-GAAP gross margins were above guidance.
Okay, so can you just remind us again, what's the difference between GAAP and non-GAAP?
Sure. So GAAP stands for Generally Accepted Accounting Principles.
Okay.
It's kind of like the standard rules for financial reporting that all companies have to follow.
Right.
And non-GAAP figures are basically adjusted figures.
Okay.
Where companies can kind of exclude certain expenses
Got it.
that they consider unusual.
Okay, so it's kind of like filtering out some of the noise.
Exactly, yeah. A clearer picture.
Okay. But I did notice that their operating income took a hit, both GAAP and non-GAAP.
That's right. It did decline.
So what's going on there?
Well, it suggests that, maybe their efficiency is slipping a little bit.
Okay.
Could be that they're spending more to try to boost growth in those new areas like security and observability.
Right. So like they're invested in the future.
Exactly. Yeah. You got to spend money to make money.
That's right. But there was one really bright spot in this report.
Oh, yeah. What's that?
Cash flow.
Ah, yes. Cash is king.
They generated $3.7 billion in cash flow from operations.
Wow. That's a lot.
This quarter. And that's a 54% jump.
That's impressive.
Yeah, year over year.
Yeah.
So that gives them a lot of options, right?
Oh, tons of options.
To make investments or, buy back shares or...
Yep, acquisitions, dividends.
Yeah, whatever they want, pretty much.
Yeah, they're in a good position.
Yeah. Why is cash flow considered such an important metric?
But, a lot of people see it as a more accurate indicator of a company's financial health than just net income.
Okay.
Because net income can be affected by things like depreciation.
Right.
Which is basically an accounting entry.
Yeah.
Doesn't involve actual cash leaving the business.
So it's kind of like...
Cash flow is the real deal.
It's like the money you actually have in your pocket.
Exactly.
Okay.
Right.
All right, so they're doing well on that front. But what about the future? What are they saying about the outlook?
Well, for the full fiscal year, they are projecting revenue growth, which is encouraging.
Okay.
But their guidance for Q2 is a little more conservative.
So they're being a little cautious.
Yeah, I think that reflects,
the
uncertain economic climate that we're all facing.
Right.
Yeah.
Nobody really knows what's going to happen.
Exactly, yeah.
Okay, but before we move on, I want to touch on something that I think is really important and often gets overlooked.
Okay, what's that?
Those non-GAAP figures.
Yes. Remember we were talking about those adjustments?
Mm-hmm.
Cisco makes a lot of adjustments.
They do.
To arrive at those non-GAAP numbers.
A lot of companies do.
Right, and while those adjustments can be helpful, to see sort of the underlying trends, it's important to understand what they're excluding.
Absolutely.
Right. Like, for example, one big adjustment they make is for share-based compensation.
Yes.
Which is basically the cost of giving employees...
Right. Stock options, things like that.
Yeah, stock options and things like that. So they're basically saying, hey, this isn't cash out the door.
Right.
So let's see how we look without it.
Exactly. Yeah.
What are some of the other big adjustments that they make?
Well, amortization of intangible assets is a big one.
Okay.
So that's like patents and trademarks.
Okay.
Also costs related to acquisitions, restructuring charges, sometimes even legal settlements.
Wow. So it's a lot of stuff.
It is, yeah.
So what we're seeing is not really the raw data, right? It's more like a filtered version.
Yeah, okay, so the takeaway here is...
Think of both GAAP and non-GAAP.
Yeah, to get the full picture.
Get the complete story.
Okay. All right, well, that's a lot to digest.
It is a lot of information.
But I'm curious, from your perspective, what does Cisco's performance tell us about the state of the tech industry more broadly?
Well, I think it suggests that, certain segments of the tech sector, like cybersecurity, data analytics, are still seeing strong demand.
Okay.
Even with all the, macroeconomic headwinds.
Right.
But on the other hand, this slowdown in their networking business could be a sign of broader weakness in IT spending.
Okay. So it's kind of a mixed bag.
Yeah, I think that's a fair assessment.
Okay. Well, I'm eager to hear your thoughts on what we should be watching for in future earnings reports. But for now, we're going to take a quick break, and we'll be back with part 2 of this deep dive.
Sounds good.
To continue dissecting Cisco's performance and explore what it all means for the wider tech landscape.
All right, looking forward to it.
All right, see you soon.
See you then.
All right, so we've talked a lot about Cisco's, current performance.
Yeah.
But I'm kind of curious, what should we be paying attention to going forward?
Yeah, what should we be watching for?
Yeah, what are the key things to watch for in, their upcoming earnings reports?
Well, a few things come to mind. First of all, I think, keep an eye on how those security observability businesses are doing.
Right.
Those are their main growth engines right now.
Yeah.
So if those continue to perform well, that's a really good sign.
Right. They're putting a lot of chips on those squares, right?
Exactly.
Yeah.
Yeah. They need to deliver.
Yeah. Okay.
Well, their networking revenue will be interesting to follow.
Okay.
Will that decline continue?
Yeah.
Or will they find a way to stabilize that part of the business?
Yeah. It's a tough market right now.
Oh, it's incredibly competitive.
Yeah.
With all the cloud providers and everything.
Right. Right. So it's like they're trying to hold on to their old business.
Right.
While also building this new business.
Yeah. It's a tough balancing act.
Yeah, it is. It is.
Mm-hmm.
Okay, so what else should we be watching for?
Well, another thing is their operating expenses.
Okay.
Can they keep those profit margins healthy
Right.
while still investing in growth?
Right. It's that balance again.
Yeah, exactly.
Yeah.
It's a bit of a tightrope walk.
Yeah. Yeah. And don't forget cash flow.
Yeah, yeah. Cash flow is always important.
Yeah, remember how we were talking about how strong cash flow gives them a lot of options?
Exactly. Yeah.
Yeah.
It gives them the flexibility to make acquisitions, pay dividends, buy back shares.
Yeah, whatever they want.
Pretty much, yeah.
Okay. So basically what you've given us is like a roadmap.
Well, I hope so.
Not just for analyzing Cisco, but for...
Yeah, for any tech company.
For any tech company. Yeah. We've talked about, revenue trends and profitability and cash flow. And even, the ins and outs of GAAP versus non-GAAP reporting.
Yeah, we've covered a lot of ground.
Yeah, I feel like I'm speaking a whole new language now.
Well, that's great. I mean, the important thing is to just stay curious.
Right.
And keep learning.
Yeah.
The tech world's constantly changing, so you got to keep up.
It's like learning to surf.
Yeah, exactly. You got to adapt to the waves.
Okay, so before we move on, I want to kind of circle back to something we talked about earlier. Cisco's focus on security and observability.
Yeah.
Do you think that's the right strategy for them long term?
Well, that's a tough question.
Yeah.
I mean, the security market is huge.
Yeah.
It's growing rapidly.
Right.
And as more and more devices get connected, the need for observability is only going to increase.
Right. So the demand is there.
Yeah, the demand is definitely there.
But can Cisco actually capitalize on that?
That's the big question, right?
Yeah.
Can they execute?
Yeah.
They're going to have to stay ahead of the innovation curve.
Yeah.
And they're going to have to fend off competition from both those big established players and those little startups.
Right. The up-and-comers.
Exactly.
Yeah. So they've made some smart acquisitions.
They have.
But now they've got to integrate them.
Yeah. Integration is key.
Right.
It's like putting together a puzzle.
Yeah.
You got to make sure all the pieces fit.
Yeah. So it's a high-stakes game.
It is high stakes.
Yeah. Cisco has a history of reinventing itself, though.
They do. They've been around a long time.
Yeah.
They've seen it all.
So they've shown they can adapt.
Yeah.
But this is a pretty turbulent time.
It is, yeah. I mean, the economy's uncertain.
Yeah.
Technology's changing faster than ever.
Yeah.
The cloud is disrupting everything.
So it's a real test.
It is.
Yeah.
It's a test of their resilience.
Yeah. We've talked a lot about Cisco's financial performance.
Right.
But what about the human side of things?
Oh, that's an interesting question.
Yeah. How are these changes impacting their employees?
Yeah.
Their company culture?
Well, when a company goes through a big strategic shift like this, it definitely has ripple effects.
Yeah.
Employees might need to learn new skills.
Right.
They might have to adapt to new ways of working.
Yeah.
Some of them might even, lose their jobs.
Right.
It can be a really stressful time.
It can be very stressful, uncertain.
Yeah.
But, it can also be an opportunity for growth and development. Companies that can navigate these transitions well, they often come out stronger, more competitive.
Yeah.
And for employees, it can be a chance to, learn new things.
Right.
Expand their horizons.
Yeah.
Really, contribute to building the future of the company.
Right. So it's about embracing the change.
Exactly.
Yeah. Okay. Yeah. All right. So we've explored Cisco's financial performance. We've talked about their strategic bets.
Yeah.
And we've even touched on, this human side of their transformation.
Yeah. And we've only scratched the surface. Right. This is just the beginning.
Exactly. There's always more to learn.
Yeah. So we've given you kind of a foundation.
Yeah. A starting point.
Yeah. To understand, where Cisco is today and where they might be going. Right. But now it's your turn.
Yeah. Go out and do your own research.
To dig deeper and make your own connections.
Sure.
So if you're interested in learning more, we encourage you to check out the full Cisco report.
Yeah. We'll put a link in the show notes.
Yeah. It's a dense document.
It is.
But it's full of, really valuable insights.
Yeah.
But whether you're a tech enthusiast
Mm-hmm.
or an investor or just someone who, likes to learn about the business world,
Right.
there's something in there for everyone.
Definitely.
So seriously, knowledge is power.
It is.
The more informed you are, the better decisions you can make about your career, investment,
your life.
Your life, yeah.
Exactly.
Okay. So we started this deep dive looking at Cisco's earnings report, but we've really explored a lot more than that.
We have.
We've talked about broader tech trends and economic challenges and financial analysis and even, the human impact of all these changes.
Yeah, it's been a pretty comprehensive deep dive.
It has been. It's been quite a journey.
Yeah.
So now I want to kind of shift gears a little bit.
Okay.
And talk about how Cisco's performance connects to the bigger picture.
Right. The big picture.
Yeah, of the tech industry as a whole.
Okay.
What insights can we glean from their report that might be relevant to the tech sector in general?
So we're using Cisco as a case study.
Yeah,
to understand broader trends.
Yeah.
Okay, well, I think, for one thing, their emphasis on security and observability really mirrors what we're seeing across the industry.
Okay.
I mean, these are areas that are seeing huge growth in investment right now.
And that makes sense, right? I mean, given all the concerns about cybersecurity.
Absolutely.
And just the massive amount of data that companies are dealing with these days.
It's exploding.
Yeah, it is.
Yeah.
But the challenges that Cisco is facing are also kind of reflected in the wider tech landscape, right?
Absolutely. I mean, that economic slowdown we talked about.
Yeah.
It's making businesses more cautious.
Yeah.
And the competition from cloud providers is just getting more intense.
Yeah. So it's a mixed bag.
It is a mixed bag.
Yeah.
Opportunities and obstacles.
Yeah. Just like any other industry, I guess.
Right. I mean, that's business.
Yeah.
Especially in a fast-moving field like tech.
Okay, but Cisco's performance does offer some valuable lessons, I think.
It does.
For anyone operating in this space.
Definitely.
Okay, so what are those lessons?
What can we learn from Cisco? Well, I think the first lesson is agility. Companies need to be able to adapt quickly to changing market conditions and customer demands. You got to be like a chameleon.
Yeah.
Blending in.
So don't get stuck in your old ways.
Right. You got to evolve to survive.
Evolve or die.
Pretty much.
Okay, what's lesson number 2?
Lesson number 2 is innovation.
Okay.
Companies that can stay ahead of the curve and develop those cutting-edge solutions, they're the ones that are going to win.
Right. Innovate or become obsolete.
Exactly.
Okay, what's the third lesson?
The third lesson is financial discipline.
Okay.
You got to maintain strong margins, generate healthy cash flow.
Right.
That's what's going to give you the foundation to weather any storm.
So it's like building a house on solid ground, not on shifting sand.
Right. You need that stability to grow.
Okay. So those are the 3 big lessons.
Yeah, those are the key takeaways.
But let's bring this back to you for a moment.
Okay.
Why should all of this matter to our listeners?
That's a great question.
Yeah.
It's easy to get caught up in the numbers and the analysis and all that.
Right.
But the truth is, we're all part of this tech-driven world.
Yeah.
Whether we realize it or not.
Right.
And the trends that are shaping the industry ultimately impact all of our lives.
In a lot of ways.
Yeah, the jobs we do, the products and services we use, even the way we connect with each other.
It's all driven by technology.
It is.
Yeah.
Right.
So understanding these dynamics can actually help us make better decisions.
Absolutely.
In our own lives.
Yeah, both personally and professionally.
Right. So whether you're a consumer or an investor or just a citizen, we can all benefit from understanding,
how this stuff works.
Yeah. The forces that are shaping the world around us.
Yeah, knowledge is power.
It is. Okay, well, we started this deep dive looking at Cisco's earnings report.
Yeah.
But we've explored so much more than that.
We have.
We've talked about broader tech trends and economic challenges and financial analysis and even, the human side of all this.
Absolutely.
It's been quite a journey.
It has been a fascinating journey.
Technology continues to evolve at this incredible pace.
Right.
What skills and knowledge will be most valuable in the future? And what steps can you take today to prepare yourself for that future?
That's a great question to think about.
It is. All right, well, that's all the time we have for today.
Okay.
But we hope this deep dive has given you a lot to think about.
Yeah, and a lot to explore.
Exactly. So keep learning, keep questioning, and keep diving deep.
Couldn't have said it better myself.
All right. Thanks for joining us.
Yeah. Thanks for listening, everyone.